Welcome to the Expansive CEO podcast. I'm your host, Hannah Chapman, founder of Expansive CEO and X Squared Wealth Planning. Buckle in as we explore how to create true prosperity and build a business and a life that expands beyond yourself and makes a dent in the universe. Welcome, everyone, to this episode of the Expansive CEO podcast. It is Friday, February 7th, actually recording on Friday for this Investment Friday episode with Brad Haines, the Chief Investment Officer of Juncture Wealth Strategies. How you doing, Brad?
I'm doing well. How are you?
I'm good. You were in a different location this
Yes.
time.
As you can see, I'm in my office in Scottsdale, Arizona, having with the Phoenix metro area, particularly North Scottsdale, hosting the Waste Management Phoenix Open this week. So it is a busy, busy time in this area with all of the Phoenix residents knowing that heavy traffic this time of year. So, but it's been great. The weather was fantastic. Lots of clients and centers of influence. Really, we had a great time hanging out with them yesterday and really all week. But I was out there yesterday, and so today I'm back in the office.
Awesome. Well, I'm still in Cincinnati. I didn't go to the US Open, but it's all good. I'm not really a golfer, so.
Yeah. Well, I'm not either, but it's a really a great time. I liken the Waste Management Phoenix Open to a party with a golf course around the fringes.
Okay, there
It's
we go.
kind of what it seems like, at least in the past years. This year was a little more calm, but you know.
Nice. Well, enjoy your time there in the sunshine before you go back to the cold up north, right? We're about to get another cold snap here in Cincinnati. So we are going to talk about some of the things that have been happening this week. I think maybe last week and this week, we started to see some different things come out, different executive orders, but that have been talked about from a few different angles. So first, though, we're having a little bit of a sell-off today. So we're going to get to those executive orders next. Let's do a market update first. It's a little bit rough today.
Yeah, I mean, for sure. Today, it really is, keeping with the theme of chaos and volatility. As I mentioned before, as the rules of the economy are are attempted to be rewritten by the Trump administration, it is going to cause volatility. Because one thing that the equity and bond markets don't like is uncertainty. And as you rewrite rules, you're inherently increasing that uncertainty until we get those rules established, and then we know how we can proceed.
Mm-hmm.
And so, it causes a lot of volatility. Will it be okay? Yeah, I think second half of the year, I think economic growth is going to reaccelerate, possibly, or at least stabilize somewhat. But the first half of the year, consumer sentiment has dropped a little bit. The labor market has loosened up a little bit, albeit from a very tight level. And so when you hear things like the job market is loosening up, it is loosening, but it's also coming off a very tight level. So it needs to loosen up for the economy to be more healthy or healthier. So you have all the geopolitical risk, both in the United States and outside. And so it's just a good time for volatility. Very, very, it's something that clients should be expecting. But by the end of the year, I think we posted pretty decent gain across the equity market.
Yeah. And as a reminder, and we'll probably have to say this a few times throughout the year, even when we have a bad day in the market doesn't end on the worst note of the year. Never has. We don't expect it to this year. We'll have a dip at some point. We'll have a worst day of the year, and then we'll have good days as well that are going to balance it out. So it's how it tends to work and how we'll expect it to work in the future. So that's been today. We have a couple of bigger topics that we want to cover this week, though, and I want to make sure we get to those. So, the first one we alluded to last week, which is crypto. There have been a lot of discussions in the Trump administration around crypto, around building like a crypto reserve potentially, um, and different, just different things around that. And then the other topic that we're going to dovetail into is building a sovereign wealth fund. This was another executive order that Trump put out, I think, earlier this week, talking about what is a sovereign wealth fund, what does that mean, um, and other countries have them already. How does that work there? Denmark has their own sovereign wealth fund. United Arab Emirates, Saudi Arabia, like these countries have sovereign wealth funds. So what would that look like? What would that do in America? And so yeah, just trying to kind of wrap our arms, wrap our minds around some of these possibilities. So let's kick off there with the crypto.
Okay, fantastic. So, very contrary to what he did in his first administration, early, a couple months ago, during the at the end of the campaign period, he started Donald Trump started mentioning, "Hey, I'm going to be very pro crypto. We're going to be the crypto capital of the world in the United States." Became very pro crypto. This is completely opposite of his view in 2016, where he pushed for higher regulation. He pushed for crypto being a worthless asset. So he's somehow found the religion that crypto is actually going to be something, and now is pushing it hard. Obviously, he has issued his own crypto coin, also with Melania. So they have their own cryptocurrency out there.
Oh, they have two separate ones, right?
Two separate ones. They have
Yeah.
Trump and Melania. Yeah. So interesting. So what has he talked about? One, he said, "I'm going to fire Gary Gensler, who is the head of the SEC, who was viewed as being very anti-crypto. He considered crypto to be security. Crypto advocates say it's more like a commodity than it is a security. So they did not want to be regulated by the SEC, which is what it is. So President Trump said, "I'm going to nominate someone who that is considered a little bit more pro crypto, a little more friendly to the crypto world." Secondly, he said, "We're going to create a Bitcoin reserve." So I want to make this very specific. He didn't say crypto reserve. He said a Bitcoin reserve. He was going to instruct the Treasury Department to have the Fed hold basically a million Bitcoins on their balance sheet as a reserve, like gold. All
Hmm.
right. Um, One, I don't think that's a possibility. Um, I think we could create a reserve, but actually having it on the Federal Reserve's balance sheet is probably a very small probability. And the reason why is because on a bank's balance sheet, it needs to be every asset on there needs to be very liquid and have universal appeal. Bitcoin does not have universal appeal. It has gained a lot of appeal, but it is not, it is very, very unlike gold in that scenario. Everyone around the world will transact in gold. Okay. Every government. Um, Gold is very convertible into currencies and vice versa. So Bitcoin is not, because of Bitcoin's change in value so much. It's not quite the same as gold, particularly because there are certain countries that just don't allow it in at all. So I don't think it will be there. Now, will there be a Bitcoin reserve set up with the US government, but just housed in a different location? That's a very real possibility. Okay. We were talking about, you mentioned the sovereign wealth fund. The sovereign wealth fund might be a good place to have a Bitcoin reserve placed in there. Similarly, the Strategic Petroleum Reserve, you could also have it in there. The one thing about the Bitcoin Reserve, though, is very interesting to me is right now the argument for Bitcoin itself as an investment is predicated upon its usage. Okay, it's predicated upon most people are buying it not because they can do economic transactions with it, but it's on the hope that the value will go up.
Mm-hmm.
Um, whereas a reserve currency already has that convertibility. You can do an economic transaction in the US dollar in almost every country around the world. In fact, they would prefer you to do the transactions in the US dollar relative to local currency, depending on which country you're in. So it becomes an interesting dynamic as to, okay, we buy Bitcoin. What does it really do for us as a country? What if it stays at the same value forever? Does it really help us? No. But does it hurt us? No. What is it? Where does Bitcoin actually become a medium of exchange? Because that's really what the Federal Reserve has on their balance sheet. They have US dollars, they have foreign currencies, they have gold, and they have, that's so it becomes an odd discussion, which is why I think it's probably better housed if we create a sovereign wealth fund and have it as an investment in there.
Well, even
Um,
with having a million Bitcoin, even just that, and again, Trump says a lot of things and we don't know what it's actually going to turn into, right? But a million Bitcoin is almost 5% of the Bitcoin that potentially can exist, right? The cap is 21 million. So if we say we're going to own almost 5% of all the Bitcoin that exist, that seems I don't know, that
well,
seems weird
it
in and of
becomes a
itself.
I think it will, like, if that happens, what it would occur is Bitcoin would basically become an electronic dollar. So by virtue of the fact the US government is saying we're putting a reserve into this by buying, let's just say, a million, that's the number that's been thrown out, as a million Bitcoins. That in and of itself would create the dynamic where Bitcoin and the US dollar would be pretty tightly controlled versus each other. Okay. So to me, it would become a very, very it would almost become a surrogate for the US dollar, because the US government is quote unquote standing behind it, because we own 5% of the market. Okay.
Hmm.
And in between MicroStrategy and the US government, they would own a lot of the Bitcoin. And so what happens in that case? I mean, I think in the short term, if they made that announcement and they actually got it through, Bitcoin's price would skyrocket and we would make a ton of money. But you have to sell those to actually recur to get it. So,
Right. And also, so just looked up the current price of Bitcoin. It's currently at 97,968 dollars and 52 cents for one Bitcoin.
yep.
So if we bought a million Bitcoin,
So it'd be $97 billion, or
uh, no,
no, 97 trillion.
well, I just put it in the chat. That's yeah. Well, 97, almost $98 billion. Is that right? Am I reading my numbers right?
Let me look at it really quick. Where's the
Right?
chat?
Or did I do that? Yeah, I did that right. Times a million.
Yeah.
Almost
Well, hold on.
98. 1, 2, 3. 1, 2, 3. Yep. $98 billion.
Yeah, 97 billion or $97 billion. Okay.
Hmm.
Well, that's a lot of money.
Yeah.
if you're comparing it to the U.S. economy, okay, if you're comparing it to the government's balance sheet, I mean that's a little bit, but it's not going to change. It's not going to change the dynamic of the of our deficits or anything like that.
So one of the things that we've talked about with regards to crypto on the podcast and in our investment meetings and when I ask all kinds of questions, because my clients ask me all kinds of questions, right? When we, and you alluded to it a little bit already, like what's the point of crypto in general if the only reason people are investing in it is because they expect the value to go up, right? That's a very different investment than, say, you're investing in a blue chip company, right? Let's say, just throw out some big names like Johnson and Johnson or Procter and Gamble or GE or these like big companies, right, that pay dividends that have, pretty steady stock growth. Why do they grow? Usually because the company itself is growing things, creating things in the economy, selling things, right? There's a reason why their stock price goes up or down, and it's tied to what they're actually doing or creating in the economy. Whereas, all of these different coins, the Trump and Melania coins included, they trade based on, uh, to use a technical term, vibes,
Yeah,
right? They're just trading them based on vibes.
yeah.
There's no actual value. There's nothing to do with that.
Well, exactly. The usage case to me is a really important thing. Um, I've challenged a few crypto advocates to tell me why I should buy this without using the term it's going to go up in value. Okay. If the price stays the same, why would I buy this? Okay. Well, I wouldn't probably. Um, but the I think or cryptocurrency has a place in places that are underbanked, that is very expensive to transfer money across country lines. If you're in Malawi, Africa, and you want to transfer money, um, from your US family to your Malawian family, it's very expensive. It may take a long time to get to a bank for your family in Malawi to pick up the cash. Um, you can do it through a banking system or Western Union or one of those two, but there's lots of risks with those associated. For example, if you use Western Union, they can give you cash, and as soon as you come out of the cash, the Western Union bandits can take and steal your money. Well, it's gone. Whereas if you have crypto, it's done very quickly, very inexpensively, and unless they have that the key, the robber can't access it. They can grab your phone, but they can't grab your money off that wallet. So it does have a place, and I think it's very important for people to understand that it does have a usage in those underbanked, um, developing countries where, if you're in Russia, um, and your currency has fallen apart because of this war with Ukraine, uh, that's not a good thing for your assets. So, could you hold some value? Could you transfer it to another country's banking system via the crypto? Yeah, you can. And so that's something else to think about is, outside of the US and the domestic or in the developed world, there are some use cases. But do I think it's going to solve everything? No. Do I think it's going to go to the moon? No. I think the use case has to be proven in the United States for it to continue to skyrocket. I think it's a very interesting technology. I think but again, it's not backed by anything. And so people have asked me, is it a stock? Is it like a stock? Is it like a currency? Is it like a commodity? And in my mind, it's most like a currency. where you have a currency that you can trade on a very short-term basis. The currency market can be traded 24 hours a day, 7 days a week in very, very large scale. And so that is where it's different from the currency markets, is there is not hardly any scale in Bitcoin. One large buyer can move the market quite a bit, or seller. Whereas the currency markets are so deep that you can generally execute very, very large transactions. I don't think it's like a commodity. And the reason why I don't think it's like a commodity is because commodities are used in some economic activity.
Mm.
If it's an agriculture product, it's going to be used for food or for fuel. If it's an energy, it's going to be burned or converted into another form for use. There's something you're doing with that commodity to improve it for a customer's use. Okay. That's not what Bitcoin does. Bitcoin doesn't do any of that. But Bitcoin can be considered a little bit more like a currency, in that the movements up and down, it just has to become more widely held if it's going to actually become a currency. And I just don't see the finite supply, which is why a lot of people buy it, is because they're like, well, there's only 21 million Bitcoins available. Great. It's also the problem as to why it will never gain as much usage as it could around the world.
Yeah, that was actually something I was going to say because we've compared it, or I have at least compared Bitcoin to, trading similar to the way a commodity trades before. But I think part of that was also thinking of it in that terms of that finite supply, right? Like mining precious metals, right? We know that there are finite supplies, or when a mine is getting close to being depleted, right? So that some of those commodities that we do actually use also potentially have a finite supply. Um, so yeah, I don't know if that
Yeah, but even
comparison makes sense.
well, even the finite supply is kind of a weird argument because um, we're always finding more,
Yeah, right. In
right?
different areas, right? Oh, they
Different
found a new
areas,
vein of
right?
cobalt or whatever we
Our
need.
technology gets better. Um, we find better ways to harvest those commodities from the earth if you're looking at a miner or a energy producer. Um, and so to me, it's almost like Bitcoin, because Bitcoin right now you can buy in increments less than one, right? You don't have to buy a full $97,000 Bitcoin. You can buy slivers of it. Well, if that's the case, there is no such thing as a finite supply because you can keep dividing it many, many, many times. So it's not 21 million Bitcoin.
That's a good point.
You divide it 10 times. Now there's 210 million Bitcoin, or 210 million opportunities to buy part of a Bitcoin. So does that argument make sense? It really doesn't for me, because again, whether I buy one full Bitcoin or a tenth of a Bitcoin, if I want to buy Bitcoin, that it just doesn't matter. I'll buy whatever I can afford into that. And I still have participation in the upside and downside. You know, it's like these fractional stock ownership ETFs that now you can buy fractional units at
hmm
certain broker dealers. Fantastic. I think it's a wonderful thing. Um, but again, it increases the supply or the availability of that investment to anyone. Um,
That's a really good point. I don't think I've heard anyone else say that quite in that specific way because it's constantly like, well, there's only so many, so the price will have to go up, some law of supply and demand. Like, no, no, yeah, if you can keep
I can keep dividing
buying
it as much.
fractions,
Yeah.
right? You can buy, people can, I mean, I've had people tell me like, yeah, I just want to put like $100 a month into Bitcoin. Well, that's like a teeny tiny sliver of a Bitcoin if you're just doing $100, right? Because a tenth of a Bitcoin is going to be $9,700 right now.
Yeah. I mean, if you look at, for example, the Russian ruble to, hold on, let me get the most current quote. if you look at the Russian ruble compared to the US dollar, it is fractions of a penny per dollar.
Well,
Yeah. So it's like that's effectively what's happening is you have it's gone down so much relative to the US dollar that it's like, okay. I mean, it's like 100 to 1. It's actually 97 to 1, but I mean, it's almost like 100 to 1. So if you split, if you divide each Bitcoin into 100 different shares or 100 different splits, and that's effectively what's happening with that currency. So it's something that I think people need to, we're still as an investment world trying to get our arms around Bitcoin. There's a lot of fervor coming from consumers, not necessarily institutions, but
mhm.
consumers are very interested in this market. They're interested in the decentralization of that aspect. For some reason, they think decentralization is going to be better in this particular aspect, which is fine. Um, but they also think that anonymity is good, which I think is a weird thing because the only anonymity you have would be in that aspect of your world. I mean, everything on your phone is open to most people. Everything on your so it's not like you have a lot of anonymity, but for some reason they want that part of their world to be anonymous, which
Yeah. Well, it's interesting and to put into perspective with like privacy issues, right? That we've over the last decade, especially even like 15 years, like privacy, the rise of smartphones, the rise of social media and data mining, like being as deep and insidious as it is for our privacy to be just basically gone. Um, in so many ways. It does, part of that does feel like a reaction to like, yeah, I no, I would like to have my privacy back. I don't want companies knowing everything about me at every moment. What I'm looking at, what I'm interested in, what I talk to my spouse about, and now I'm seeing it on my phone. Like people don't actually like that. And so what I just wonder if that's, the fact that crypto can technically be anonymous, private, or another way to say that is like, yeah, I want that privacy.
yeah, and I think that is an important aspect. I think it is a reaction from um, all of the different companies gleaning our data, whether you know it about it or not. Um, they try to go a long ways in trying to, you have to give permission that your data can now be used and taken and all that stuff, but it's still used.
Hmm.
But the problem with anonymity is it really does um, incent poor behavior, illegal and illicit activities. And so that's where I think it's I think it would be um, it'll never happen, but having the regulators access to the open to the ledgers to see who's who and what's what, and no one public can know who it is, but certain regulators can find out who these users are. In one way, it's really good for criminals because it is anonymous, and in a second way, it's really bad because the blockchain technology upon which crypto is built is a fantastic technology where who owns what, or this block, right? This chain, this crypto block, this Bitcoin, let's say, from its inception to date who's owned it, when they owned it, and how long they owned it. It's all open. You don't know who that wallet is. You just know that this wallet owned it during this period, but you don't know that person, but you do know that owner, that de-identified owner. And so if the governments of the world decide that they want to find out who's who, they can at some point figure that out. Um,
Hmm.
and then it's really tough to get around not or proving you didn't have a participation in illicit activities.
That's true. Yeah. No, that's what blockchain is. That's what this is.
Yeah, yeah,
Uh,
legitimately, it's like you just put a nail in your coffin at that point from a legal standpoint.
well, beyond Bitcoin, one of the things you said before we started recording was that that's not even the most transacted cryptocurrency right now, right? And we've
Right.
touched on that before that there's, I mean, literally thousands of different coins. Um, and so what are the, yeah, well, first I'll let you just say which, like, what are the ones that you were telling me about?
Well, so if we look at it in terms of US dollar value being transacted, Tether is the most transacted cryptocurrency on the planet. Um, and I'll give you some data really quick. Um, this is going to be a little bit, but Tether has 118.4 billion in reserves, um, with 5.3 billion in excess reserves. Um, and it also has its stable coin capitalization was 114 billion. So in 2019, it became the most traded. And as of July 2024, so last summer, it had 350 million users trading it worldwide. So it is by and far the largest traded, most accepted cryptocurrency out there.
And it's
Bitcoin,
pretty much stable.
yeah, yeah. I mean, that's its deal is it wants to become very, very stable. I mean, that's its job. Is it I think, and don't correct me if I'm wrong, but I think it became the first one to say we're a stable coin,
Mm,
which is a coin that is trying to stay very, very stable to the US dollar. So it doesn't go up and down a lot. It can be actually a medium of exchange because you can count on how much it's trading for relative to the US dollar.
right.
Um,
And then from that perspective, in those underbanked communities where it's hard to get or send um, currency, right? Something like that, that's actually the thing that's more needed is something that is going to be stable, not like, hey, I'm trying to send you $10,000 in Bitcoin. So I spent 10,000 US dollars and then it tanked. So now it's only worth 5,000 US dollars. Sorry. When
right.
you get it, right? Like that's a problem. If
Exactly, because those people that you're sending it to probably need the value to be able to do economic transactions in their home market, right? So it has to be one, you have to be able to transact it where the price is fairly stable. Two, you have to be able to convert it into your local currency, where some Bitcoin times sometimes you can't. You have to convert it into US dollar, then convert it into another currency. So that gets a little more expensive.
but then something like Tether then isn't going to be the thing where you go, I'm going to put $100 a month into that because it's just still going to be $100,
Right,
right?
exactly.
It's not going to increase in value. So then at that point, it really, like that, it's a different animal or a different, different thing.
Yeah, to me that it's an actual currency.
Hmm.
It's not a currency that people are using as a speculative investment, which this happens. So this happens in the foreign currency markets prior to crypto even being developed, was people would trade in foreign currencies to try to make more money, right?
Hmm.
There's a whole class of traders that do that. Um, and now it's converted into now those a lot of those individuals are trading crypto on that same sense. Um, the moves are just far larger than they are on on the on the foreign currency FX market. So
currency arbitrage markets.
Yeah, yeah. I mean, there's people will trade everything, you know, to try to see if they can make a little extra money. So
So moving then to saying like, okay, so we've talked through some of these different coins, what they're for or not for, um, or just again speculation, which a lot of it has been speculation, right? And which is one of the reasons we've been, I won't say reluctant, but just paying attention to like what are the fundamentals here? Um, so if we go back to what does the US government need crypto for? What's the point of creating a reserve fund? All right, well now we've got this sovereign wealth fund idea being floated. First, let's talk about what is a sovereign wealth fund, and then why would we maybe have crypto in that, or what else would go in that in the US? And
okay,
maybe you can compare it to like Saudi Arabia, for example.
yeah, okay. So sovereign wealth funds are governmental entities that are essentially investment funds. Okay, they are created with excess cash that the government has that then instead of returning it to the citizens, what they do is they use those funds, the returns on those funds to fund future budgetary increases. So instead of increasing taxes to pay future bills, you have this big portfolio of investments then kicks off some cash that then you can supplement you supplement your budget with those funds as opposed to raising taxes in the future. Now, Alaska, Alaska has a sovereign wealth fund. They call it the Alaska Permanent Fund, which effectively makes a ton of money on leasing land to oil and natural gas companies. All right. They got a huge natural resource. They're monetizing it. And in Alaska, you don't pay state income tax. You get a check for being a citizen of Alaska because of the natural resource that you are monetizing. Um, Now, you mentioned Saudi Arabia, Qatar, Kuwait, Abu Dhabi, Norway. They all have sovereign wealth funds. They're very large, very, very large investments. Saudi Arabia is probably the most famous one because it has been actively involved in making deals, making investments. Well, President Trump came out and said this week, hey, or last week, we're going to set up a sovereign wealth fund in the United States. Um, could be a great idea. We've kind of done it off and on over the years. And so I want to have people take a step back and I'm going to kind of go down a little bit history. In 2007, 7, 8, and 9, the federal government made investments in private companies. They did so because they were considered systemically important and they did not want them to go bankrupt and lay off hundreds of thousands of people. They did it to the banking industry. If everybody remembers, we gave a lot of money to the banks to shore up confidence that these banks would be around so that they wouldn't go bankrupt. And if you remember, Bear Stearns went under, Lehman Brothers went under, Morgan Stanley was kind of on the ropes at the time. And so the the Treasury Department came in and made a big investment. Also made a big investment in AIG, made a big investment in General Motors. And so we've kind of already done a sovereign wealth fund. Now, those investments actually made us quite a bit of money.
Hmm. They don't talk about that very much.
No, because it's years in the future, and we've forgotten about those, right? We've forgotten the average citizen doesn't even think about it. What's nice is if you have a sovereign wealth fund, you can actually track that over time, and the results would be available for every citizen to look at. Um, and I think sovereign wealth funds are also longer term places where if you have an industry that you are trying to foster or you're trying to protect from foreign competition, you can get involved in. So, for example, the US Steel, Nippon Steel combination, where Biden said not going to happen. Steelmaking is a strategically important industry for the US to have an independent producer. It's our last one. And so we were not going to sell it to the Japanese. Okay. That would be a one place where the US could step in, have an ownership in the private company, even if it was 10%, right? Well, now they can't sell out because we own the largest percent
Hmm.
as the US government. So the US government could always veto foreign producers of that, any buyouts. So that's one aspect. Those are all really good things you could do. If, for example, this is what we want to do. We're going to be the crypto capital of the world. We could take invest and we can invest in companies or spawn companies that have different aspects of crypto in mind. Okay. Um, I think that's one thing. I also think it defeats the purpose of crypto because it becomes centralized as opposed to decentralized and all that. But let's set that aside for a second. You could actually do that in the sovereign wealth fund. And you wouldn't have to create, during crises, we have to create these different funding mechanisms to save these particular industries that are going down, whether it's banking, cars, or whatever. We have to create them on the fly. And so this would give it a house that we always have the ability to fund it more and to place those investments in there. Now, that's the upside. What's the downside? Why would we not want this? Well, right now, the US government's $36 trillion in debt.
That's what I was going to ask about. Like, how do
Yeah.
we do that?
So normally, as I alluded to earlier, sovereign wealth funds are for governments that have excess cash. They have money over and above their budgets. So they have savings. Well, what do you do with the savings? Well, you can pay off debt or invest or lower the tax rate for your citizens. Well, we're already lowering the tax rate seemingly this year with locking in the Trump tax cuts of 2017. We've already done that. But we still have $36 trillion in debt. So is it better to um, instead of investing into a sovereign wealth fund, just to returning that cash via lower taxes, even lower taxes to corporate or to U.S. households or taxpayers, than to take their cash, their excess cash, and put it into a sovereign wealth fund? Is it more efficient? Can the government do it better than the collective overall person in the United States? The argument has been no, because government has never done something better than a private company, with the exception of military actions. Okay. So, we may have one, but it's going to probably be fairly small until we can cut a big expense out of the budget and out of the debt before we do that.
It seems like it seems very counter to most conservative and Republican positions, right?
It's it is 100% a democratic or socialist ideal.
That's very funny.
It it is funny because if you tell MAGA that the sovereign wealth fund, the only places they are found are in socialist or autocratic governments, they wouldn't believe it until you give them examples.
Right.
I mean, that's effectively who has them. So, it can also be used as a economic weapon against your political opponents, which is also a nefarious risk that we face if we create one that is sizable.
Mm. Yeah, and I think the difference between, because you mentioned Alaska having a sovereign wealth fund, but part of what they do is literally give money to citizens, right? So it's not meant to just grow itself,
Right,
um, or be used for some future thing necessarily. I don't know everything about it, but I do like that's pretty fairly common knowledge, right? That if you live in Alaska, you get paid to live in Alaska,
right.
by the government, by the Alaskan state government. Which is not, I don't think I've heard anything similar to that coming out of this discussion for a sovereign USA sovereign wealth fund.
No, in fact, I think the idea is they want to do very, very long-term investments and make money off deals. And like I said, I mean, we're kind of already doing it in different programs in different parts of the government, um, which I think is necessary because in times of crisis, the government is the last investor slash lender of resort.
Right.
It always will be when we go through crises. But do we make it a little more efficient because now it's a one program, one wealth fund, and we don't have to waste time creating the facility. It's just already created, and we know what to do and where to go. Um, you know, I think I think it's a good thing. Um, I get concerned that the oversight of it has to be very, very tight and that it cannot be used for political warfare, economic warfare against your political opponents. I think that could be very, very dangerous.
Yeah, the thing I was contemplating this week, contemplating a lot of things this week, but one thing that came up, as I was thinking of like what is the role? What the actual like boil it down, what's the role of government or what should it be? Um, in my humble opinion. The main purpose, is what I wrote down in my notes, is to provide shared resources for shared needs. And that's what, have an entity that does a good job of being a fiduciary. Like they should also be a fiduciary for
For
the
sure.
people that they're serving, right? Like I have to be a fiduciary for my clients. The government should be a fiduciary for its constituents and its citizens, right? So that it's always doing what's in the best interest of its citizens at any given time. And when we pool our resources through taxes or however we do that, that entity then is charged with doing the best job they can with those shared resources to help spread it amongst our shared needs. And so, if in that case, like from that lens, if a sovereign wealth fund can then do that thing, right, when Helene hits and Asheville, North Carolina sees the most destruction they've ever seen in camp, like in hundreds of years. Does that sovereign wealth fund then easily, like you're saying, like, okay, here we go. Here's the millions of dollars that you need to help rebuild without a bunch of red tape? If that's the purpose of it, then that makes sense to me as a way to be a fiduciary of shared resources for shared needs.
Yeah. It also it's a weird, um, I think it's a weird for me to contemplate because like in that scenario, in that example, I think that's great that we could help where it's needed. But it also can be problematic in the sense that, well, now you have a because essentially you're going to be an insurance company.
Right.
Part of And so now you're competing against every property and casualty insurance company is competing against you. Are your rates going to be cut down because you're a agency of the US government, which has a triple, basically the top financial rating kind of out there. I mean, it's not exactly the top, but it's a good, we have a good credit rating compared to corporations. Um, and if you do that, are you just going to undercut all of the private? So now what it becomes is if you have to compete against the privates and you undercut your premiums, are you now underpricing the risk, and you're going to have to pay a lot more out than you actually take in?
Hmm.
So now you have losses. And so that's where I think it becomes a real step, a real, you have to be careful what you do in this fund, and you have to be careful of how you do it. Because it could be a real mess if you do it the wrong way. Because now you're like, well, you have to compete against the government, and the
Right.
government's going to price it cheaper and have better coverage, and now you as a private property and casualty company is like, well, I guess I'm not competing in that market anymore. And so then you run the competition away, and it's only the government. Well, then the government can go in and say, well, we're the only market in town. Chink, chink. Now you're up by 10%. We're going to raise your premiums 10%.
Hmm.
And they can do that, right? And so that's where you have to be very, very careful about how and what type of investments you take in there. For example, Saudi Arabia does a pretty decent job because they're taking a lot of their excess petrodollars and trying to invest in the next generation of technologies. Once their oil runs out, they understand it's a finite supply of oil, and they can pump it for many, 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 many decades still, but they know it's going to eventually run out. So they're trying to use their money to invest in the next generation, to get some industrial base and all of those types of things, to make sure that the next generation or two, that when the oil does kind of run dry a little bit, that they still have activities that they're doing that's going to earn the kingdom of Saudi Arabia a good amount of money, and to take care of their citizens.
Well, and they don't pay taxes either,
They make so
right?
much. No, it's
Right,
sort of
right.
like Alaska on steroids, like massively. Like yeah. That's why if you're poor in Saudi Arabia, you may be driving a Mercedes.
Mm. Yeah, yeah, it's very, very different setup, right? And the fact that it's clearly benefiting the upper classes there too, but it does seem to benefit a larger population, a
Yeah,
larger percentage of the population. Um, and that's what it's meant for. Again, like we said, a socialist idea and ideal.
ideal, but autocratic, right? I mean,
Yes, yeah,
Saudi Arabia is a kingdom, and if you don't do what the king says, that's really not a good thing for you. That
right,
you definitely have the potential of ending up dead. So
right. So again, it's an interesting idea. We'll follow along with that. And if anyone has any questions around that, if you've heard anything different, if you have any other, like, well, how would this work? How would that work? Whatever, like, send us your questions. Would love to receive them. You know where to find us. I won't tell you that again today. It's also in the show notes in case you ever need to look. But there's still a ton of stuff coming out, executive orders left and right. So we will try to keep track of things. And we'll come back next week and tell you what's up. Thanks for being here, Brad.
thank you.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.